Good morning, ladies and gentlemen, boys and squirrels. The market is up, and that's because we started a buy signal yesterday. So if you were on stream yesterday, we recommended pretty much watching the market's long bias and into today, mainly because, again, the market's entered a long move. So if we bring this up real quick, transition to the 30-minute time frame here, you will see that the SPY, or SPX for that matter, has reclaimed, its price of 6,864. Or if you're looking at SPY, let's see. Yeah, if you're looking at SPY, regular trading hours, it would be 1 second. Yeah, 684.90. So just double checking that. And market's doing really well today. So long story short, markets are definitely in a buy move. So we'll pretty much stay alongside of the market until stated otherwise, really. Okay, well, see, there's a few people in here. Yeah, so as we were mentioning, markets are doing pretty well here this morning. Overall, I would imagine we might have a tiny little pullback coming, but let's jump into it. Volatility index is negative. Markets are positive, so obviously the markets are going up. I have a little bit long on UPRO 3X leverage ETF. That position started yesterday as the market got over the 50 SMA. Good morning. Yeah, so we'll have some fun today, hopefully, obviously. So just trying to get started for the morning. There's a lot going on in my brain here. But number one, markets over the 50 SMA that started yesterday. Your markets are up higher today. Go figure. The volatility index broke down yesterday, so fear started to remove itself from the market yesterday. You might be looking at the VIX and seeing that yesterday it was priced around 20, so you'd think high VIX, market fearful. That's true, but also markets can be becoming optimistic even when the VIX is elevated. So just because the VIX is high doesn't mean there can't be a signal or a breakdown of SMA trend that then tells us that fear is going to be removing itself. So even in a high volatility environment or high VIX, you can still be signaled that fear is going to start removing itself to some degree. And that happened yesterday. And we wake up this morning and the market's launched itself to the moon overnight while everyone slept. Which, by the way, is very common. Markets normally do that. Markets normally go up overnight. And actually, I mean, if you go on the internet, you could find some article or something about what was I going to say? Yeah, you could go on the internet and find some sort of article regarding how markets put on majority of their gains in the overnight session. So over a historical period of time, there's been traders or strategies that are pretty much just all about buying the close and selling the open because historically it just works. So it's just common in general for markets to go up overnight. But either way, yesterday volatility markets broke down and obviously the 30-minute 50 SMA went positive. So markets are more on the long side. Algorithms are more on the buying side. Optimism is more willing to drive markets higher. I think we're a little overdone for the moment, obviously. So, like I said, I think we're kind of looking towards a little bit of a pullback here, which we pretty much just got. And as far as that pullback is concerned, I was first thinking that like MES or ES would go down to about 6,930 here, SPY back into about 689 or so, give or take, yeah. So pretty much, yeah, really like you just kind of mentioned. So this breakout pulling back down to about there. Yeah, we'll see what we get today. There's a couple things that I'm kind of thinking about, which is market's blown up. I don't really think we should be trusting any sort of breakout here over this previous day high there, just in general, yet. And that's mainly because we've been in such a sideways, choppy market. I'm just not going to be the first one willing to break the market out, you know what I mean? Since it's been so choppy and so, unwilling to trend in any direction, I just won't be the first to try to buy a high after a long run and try to get the market to move out of this channel. I'll let somebody else do that one for me. You know what I mean? So let's see if that ends up happening, and if not, then good chance we're going to be pulling the market back. Now, there's a couple things that I'm thinking about for pullbacks outside of Fibonacci stuff, right? So if we're not talking Fibonacci, we're just looking at the volume weighted average price. I'm going to throw on a screen here in a second. There it is. So one of the thoughts is, always the possibility of backtesting the 30-minute volume weighted average price for the day at some point, whether in the pre-market or going into the open. This one's kind of debatable because we've kind of done it a little bit, but not fully, right? I mean, we kind of first started up on the day and kind of got it here, and he kind of pulled back here, but none of them have really touched either way. So that's kind of an idea that if in the event we open up and for whatever reason we get some relatively good weakness, we'll be looking down to probably about there. That's always kind of a relative go-to for the day. So those are some thoughts for me on the SPY. Let me double check the volatility index too. I just want to make sure I'm not missing anything here. Still getting some weakness here. We might even see the NQ drop out down here to about 25,136. So we'll just speak in terms of not 25,000, so 136 or 5136, etc. I wouldn't really be looking for too much more on the downside for NQ or really the SPY and ES for the moment as we've backtracked that previous high. Probably see some micro bouncing in defense here, but yeah. So as the story always goes, we'll see. Obviously, getting long yesterday would have been a smart idea when we talked about it. Said, hey guys, everything is long bias up right now in the macro. We are not bearish. So, pretty much all you got to know is anytime the market's getting positive, I am always debating, thinking, looking to buy some UPRO 3x leverage ETF for my long-term Roth IRA investing / trading account. So anyways, I have a little bit long. I sold some here into the pre-market highs, and now I'm just holding a little bit for a swing trade, and now it's completely free. If it continues going up, great. If it doesn't, not going to be surprised. We're in a sideways market. So that's another reason why I took profit into this high today, because we're not in a trending market. We're in a back and forth market. And until that proves that it's not the case, it is the case. And we're going to trade it like it's the case, right? So that's what's going on there. There goes NQ down into 25,136. If this does not hold, then we might be seeing a little bit more on the downside. Actually, I could, let me, VIX, MES, do I need those? Not, I mean, the VVIX would be nice. I guess I could, thinking maybe of a better way to set up my chart here, or my screen, so I can keep more on that we all want to look at. I'm just trying to think what might be a good idea here, or the best way to do that. Because I still want to keep up VVIX and those guys. Could just do two big ones. Haven't really been using the Volt lately as much, or Tick C, so I could just change those. Let's do that. And to be honest, I'm hardly using the watch list right now, so let's try something different for the day. I'm gonna do this. And this is going to become, I'm going to try something, see if I like doing it like this for the day. Do I just make it 4? I've really been using the biggest, this guy. Just keep it 6, make the 2 top small. All right, we'll do that. So this is going to become ES, and this will be NQ. Now, come on. There we go. But I guess I really haven't been using that either. Sorry, I know I'm being really quiet here. My apologies. I'm just using my brain, trying to at least. Kind of need the one day there. Sorry, I'm just making sure these are all set up and accurate real fast. Yeah, those work. All right, sweet. We're all set there. So, bonjour. Good morning, good morning, good morning, everyone. Good morning. So, as much as I'd love to say I know exactly what's going to happen right now, I mean, I kind of, again, this is not necessarily my greatest spot in the market, if you will, it's not that, it's just, when I look at today, I just don't look at it and go, this is, like, it's not like we're not transitioning the 50 SMA, so it's not about breaking out. It's not about pulling back and back testing the 50 SMA. It's not about doing an oversold bounce. It's whether or not we're going to be continuing the long or pulling the market back off this high, right? In the exact moment. That's what I mean. You know, yesterday at the yellow line down here, and I know there's quite a bit going on. I'm actually going to delete some of this other stuff in here, so it's a little bit cleaner there. And actually, I need to add something else here. I was kind of messing up here. My bad. This guy, I can do it. I'm gonna add this guy. Oh, actually, I guess that works. It's a different color, but whatever. I don't know what that is. I don't know why that's there. Sorry. Yeah, so yesterday over the 50 SMA, right? That was it. That was the break over the 50 SMA. So there at that point, that's like we know the market is, or well, even before that, we could look for the back test long. Then if we could get over and confirm, we can look for the continuation long. But now it's like, who really wants to buy this high and keep driving this market higher? I hope there's someone willing to do it for me. I just don't really care to be the one. Unless we get a big enough pullback down into some supports that end up looking decent, right? Then we go up. If somebody else wants to keep forcing the market higher off these highs for us, then, you know, so be it. That's just cool. But it's just hard to be the one to want to do that. So if I were to do anything long bias in these highs, it would just have to be more of like scalps. You know, so if it keeps forcing itself up and I want to participate, then I would be participating more of like a, you know, tiptoeing manner. So that way, if there is in fact a big pullback that's on the horizon, you don't get hurt. And then if we get a bigger reset, then you would actually look for some dips. So we are in a dip long market, right? We already broke out yesterday. We've continued the market up. Now it's about how long does the buy signal last? It's a higher low, higher high market until stated otherwise, right? Remember, in theory, the market could literally sell all the way down to here and still be bullish, okay? Remember, we're in a sideways market. I do not like not that I don't like, it's just, the market's fine. It's just a sideways market, right? So we just can't be looking at and expecting markets to break highs and then just keep running right now. It's just, it'll eventually happen. It's just not right now, most likely, okay? And we're not looking mega short on the market for trend down, or let me change that. We're not looking for we're not in a bearish regime right now. We're not in a bearish market structure. All right. One could argue maybe the market's a little overbought from yesterday, sure, but it's not a bearish trend market. So therefore, first thoughts are always, you know, dip to long until proven otherwise. Now, if the volatility index were to go into a new buy signal, then yeah, we would look to short a top of the market and hopefully look to pull it back more aggressively. But we're not breaking out the VIX right now, so that's not the trade idea we're looking for today, right? Yeah. So I'm just kind of running through all the things I'm thinking about for the day, looking at all the different systems and markets and different strategies and basically building my plan in my brain right now. And anything can happen at any given time. Markets can backtest any sort of 1 minute VWAP, 10 minute, 5 minute. They can backtest all sorts of Fibonacci. And any one of these things is going to happen to some degree on the day. It's not a matter of things that we talk about happening or not. They're going to happen. We already know that. It's just a matter of trying to figure out more about, you know, sentiment for the day, overall direction. And, you know, if in the event things don't go, you know, up, how far are they going to pull back? And if they do pull back, is this area going to be decent? You know, so just figuring out how you want to interact for the day and when and why. You know, like for example, right here, you could have done like a little scalp on the NQ off of this fib here if you wanted. Like that's a scalp long trade you could have done, right? I mean, in theory, this is a break over and then this would be a pullback. You could have scalped that long. You could have done, you know, basically a mean reversion back to the fib here, scalp that short. Again, there's 36,000 different trades you can be looking at all day, you know, so it's not that I'm sitting here trying to point out trades for you guys. I'm really just trying to map off the overall direction for the market and kind of help you guys stay on the right side of the trends, and then not get screwed over. That's really my objective while we're on these streams. Bitcoin. Yeah, what about our friend Bitcoin? Yeah, so Bitcoin is going up. Now, you guys remember I wanted to get long Bitcoin on this blue line the other day. I should have just put a limit order in, but it probably wouldn't have got filled. I could have got a little... But either way, I wanted to get long down here on this blue line. I missed it because we were on stream, I think, and then I didn't have any sort of orders in, but kind of stupid not to. But, you know, sometimes I like to kind of see how the market develops into a level. But anyways, so... this was our buy point for Bitcoin and recommended buy point for Bitcoin, and also a recommended target to the downside. Regardless, here you go. Now the target long for that bounce would be this box, right? So the target of this long is basically completing as it relates from going to a weekly level to a, well, it's not, well, sorry, hold on, week to day, right? So Bitcoin is done for that long trade as it relates to what I would be thinking, right, over the past couple days. When I was like, hey guys, we should probably be looking kind of long bias down here, that would be the target of that bounce. Or maybe a little higher, but we're pretty much completing that long as it relates to the system there, okay? Big explosive candle up, have no clue. Is that data? Didn't think we had any data. I don't really know what that is. 9th. Oh, it's market open. I thought we were still had time till market open. My apologies. It's like, wait, hold on. I'm like, that's too much volume for market open, or for pre-market. Sorry. All right, so explosive moves up. Yay, market's going upsies. Yeah, I mean, if we do just, I mean, like I said, we're in a buy move right now, so if you didn't get long yesterday and you want to be long, you're basically chasing the highs up right now, which can work. Like I said, I would just rather let somebody else break the market up for me as opposed to trying to be the one to do that. So let's check the gap up today. So we got a pretty big gap up. So that means with continuation up, SPX should go to the 161, which it's already done because that's normally how it works, right? So this is kind of like how the SPX algorithms are programmed, right? You can see like instantly where did it go off the gap, right to 161. See how if we measure from the previous day's close to current day open, candle opens up, shoots instantly to 161. A lot of times the SPX will do that. It's pretty much a program in like computers, and there's really no way to exploit it on the SPX options. Like that 1 minute candle, you know, the market already knows that one, so you can't even really, like, if you want to buy options on that, you're not going to be able to do anything because they just won't work. I believe me, I've tried; it's not going to work. So it's kind of, you know, it's like you kind of know where SPX is going to go, but sometimes it won't let you kind of play with the options the way you'd like just for that first 1 minute. But anyways, so there's that. All right, so far we have pretty good momentum on the Magnificent 7 out of the gates, or starting out of the gates. Again, still kind of a debatable open. All right, we're gonna throw some 1 minute VWAP stuff on. So obviously if this long does not just keep pressing in the immediate, then the market would generally be looking to pull back down to about where I just put that VWAP. Netflix moving pretty good today. As I say, looking at Netflix, that's moving relatively decent. Market's still holding up, you know, okay. Yeah, strong pump. NQ still holding up. Market's still holding up. Again, the market is in a buy signal for the moment. And volatility markets are downsided. So, you know, unless there's just going to be a top tick short somewhere, the markets, in theory, are just, you know, kind of on the upside. Not kind of. I mean, they are. There's no kind of questioning that. It's good stuff. All right, let's take a look at the 30-minute chart here. 30-minute volume weighted average price still pretty much, yeah, it's no test, but like we said, unless you're below, it's just not going to happen most likely. Again, still markets kind of long-sided, momentum still relatively strong for the moment. When I say strong, I mean it's just we're not rolling it and so on and so forth. Yet. Again, volatility markets still negative, markets positive. Again, could just be a force up kind of day for the moment. Yeah, if we get to today's highs, I mean, could also see a nice little blow off top from the SPY. And then there's a blow off top from the SPY. Well, I don't want to call it a blow off top, but you know what I mean. It's kind of getting juiced up a little bit there. Market's still rallying good. Like I said, buy signal still underway. Volume weighted average price for the intraday. Start of the day is still positive. Till the market runs out of momentum, we won't see any sort of harsh pullback. Again, it's not like unless the VIX just randomly bottoms, the market in theory can still keep grinding up. That's kind of interesting. I'm looking at this Netflix and this ticker over here. That's kind of interesting. I'm wondering, and let me double check something here. If we're going to use this guy to drop the market some here. You know, I wish I had a little bit more to say, but for the moment, again, we were just kind of in a slightly long bias move, which I don't like the long up here, personally. But again, I'm just talking about the trend of the market, the VIX. Yeah, let me double check a couple other things too. Wonder if we got our 161 from yesterday on this yet. No, I haven't gotten that guy. That 1618 could be an interesting target if we continue the breakout here, and then also arguably a top level. So that could be interesting. Let's go into NQ here and just double check. Should have already had this done. I thought I did. Oh, I do. Okay, wait. Yeah, that was yesterday. Yeah, so NQ's 161 extension for yesterday is all the way up here. So that's arguably kind of a potential top ticking short level if the NASDAQ gets up that high, which also makes it a long target destination. Again, I'm still long UPRO 3x leverage ETF from yesterday. So again, I do have some on long there. So obviously I would like for the markets to continue going up, because if they do, then I'll just make some money. So like I said, it's not that I want the market to pull back. It's not that, you know, it's just, yeah, I mean, that's it. It's a dip to long market. So when you see me looking around and doing all this, really all I'm doing is thinking to myself, if the markets were to pull back within this uptrend, where can they do it? Why would they do it? And if they do it, how far are they going to pull back? And then if they pull back, is it going to be a good buy point? For the moment, all the good buy points for me have kind of passed, right? So other than like some VWAP stuff, when I say good buy points, like bigger buy points, the only thing I could really do right now is like some 1 minute VWAP stuff, only because, you know, past Fibonacci levels we would arguably use are already past. 50 SMA levels we would use for breakouts are well past. Back tests of 50 SMAs are well gone. So I just don't. Yeah, so the only thing I'm thinking is like just keep rallying the market up high enough, and then eventually there might be a short somewhere to pull the market back. I just don't see it for the moment. And I could be wrong, but you know. You know, like right now the 5 minute momentum is positive. So you'd be shorting against momentum, you know. Like in the event the market actually topped and like rolled over, then we would be targeting back down to about like right there, like 6,930.33. So like, you know, just because I may not see it, but if the market ends up topping and rolling, I mean, that's going to be a target there on the ES is back down to 6,930, give or take. Yeah. NQ still holding up, still doing pretty good there. The SPY just got back to its 1 minute volume weighted average price, which can arguably be, like we said, a dip buy area. Well, it just always is in general, you know. So that's kind of that first tag long pop off that 1 minute volume weighted average price. Market's holding very strong as far as the NASDAQ, right? You see how the NASDAQ just went into a new high. The NASDAQ's just straight selling off there. The S&P issues are just straight up selling off too, but the Magnificent Seven issues are just going up. So I would say a lot of today's market is going up mainly because the Magnificent Seven stocks have been going up. That's got to be it. Because they're not really getting participation from some of the other areas of the markets that we would normally look at. So again, if the market's meant to continue grinding higher in the immediate, that dip we just had is going to be the dip that then pushes us into a new high. Again, it's debatable. When I say that, it's just this is the 1 minute volume weighted average price. So a lot of times you'll get that retrace, can hold support, take it to the new high, or it's going to be kind of a shelf spot if you don't end up holding. So let's keep that in mind. Yeah, and I'm looking at this. I've actually been trying some fib stuff on the Magnificent Seven ticker, and I kind of like it. It's kind of fun because it's like fibbing out the Mag 7 essentially. So it's been kind of interesting in that regard. So based off of yesterday's action, the Magnificent 7 161 would be like up to there, right? So, you know, if you think about it in that terms, if we're rallying the Magnificent 7 to the 161, then the NASDAQ should just blow through the roof today, and obviously the S&P is going to follow. Now, remember earlier, it's not like, earlier it's like, I don't know if I want to be the one to try to break the market out today or whatnot. We'd rather let other people do that for us. So clearly it's working and like that's happening. And that's kind of what we wanted to see first is like, okay, are we going to break this up a little bit? Is the market going to start moving in that, arguably that direction? So far it is, right? Here's another thing too. If we were to, I'm going to go use the SPX chart for this, and I'm going to keep this one relatively clean. So SPX is up to the 161 off the gap. That's pretty normal. There was no golden pocket on this candle, so we pretty much just did that. So that was another thing we kind of had in the back of our mind was just this big candle here in the 30-minute of our last sell signal or one of had no golden pocket back test, so that's unbalanced, right? You guys know the markets don't like inefficiencies. So with that not having a golden pocket test, right, likely area for the markets to go back to. So just in general, when the market got over the 50 SMA here, that was unbalanced. We just put it back into balance. And the other thing too is we know that the last 30-minute selling operation for the market took place on this breakdown here, and that's at 6,953. So 6,953 is already a long target for us. It's just a matter of when we're going to get it. Sometimes what I like to do is I look at where the previous 50 SMA break-ups and breakdowns were, and then when in the future we go into a new one, we'll look to take the market back to where that breakdown was, because we know a bunch of algorithms and computers and market makers shifted markets there. So it becomes another kind of logical target back test area. It's not the holy grail, but it does work to some degree, kind of like you see here. If I zoom in a little bit, sorry, let me zoom in. Sorry, let's zoom in. So kind of like right here, right? So, right, if you were listening to my stream, I would be like, guys, markets are negative. We could be looking for oversold bounces. Okay, we could be looking for the back test of the 50 SMA. The 50 SMA is back test. If we get above and hold, the markets turn positive. Markets are holding. Markets are positive. Okay, guys, the markets could be overbought. We might get a pullback to the 50 SMA. If the 50 SMA holds support, we bounce it. If it breaks down, sell signal. Okay, guys, markets break down the 50 SMA selling operation. Selling operation goes down to the previous 50 SMA location where we started the buying operation, right? So it's like it's like the previous buy operation gets taken out on the next new sell operation to a degree. And it doesn't always work perfect, but it works enough, So, no, I don't want to upgrade. So yeah, we're just watching the markets up long. You're just staying long. That's pretty much all you're doing. Oh, dude, freaking, looks like the YouTube straight capped me though. They're capping. YouTube is straight capping at 16. Yeah, so that's how. All right, so now we have the Magnificent 7 combination ticker moving into the 161 target of it's not even, it just is what it is. Oh, sorry. The market's gone higher. That's great. As we just discussed, if the markets were to hold the 1 minute volume weighted average price for the day, we'd be more likely to bounce and move the markets into new highs there, because that's just how the market works to some degree, not always. So yeah, job well done. If anybody did anything on the upside today, like I said, it's kind of you're having to buy highs and push markets higher. We're in a buy signal, and actually now that I think this could be a little bit of an area for a short, because we'll see. I was gonna say, because maybe we might be a little soon. The Magnificent 7 are getting relatively close to the 161, and we just got let's see, that's a strong market. Would you really want to short that? I mean, I might be able to get away, but with something. But yeah, let me just double check something here. That's the 161 target of yesterday's trading session. So it's debatable whether we get a little bit of a pullback in this area on the NQ or not. So I'll watch it for a little bit of a pullback in this area, just because we're running into some 161 stuff. It's definitely shorting against the trend, or betting bearish against the trend. But sometimes you gotta take a stab at something for fun. Bitcoin up to its next target there of 66,800 or so. SPY continuing up into the highs. All right, there's the Magnificent 7 ticker hitting its what was I going to say? That's the Magnificent 7 ticker hitting the 161. So it'll be interesting to see if there's any sort of reaction here or not. Kind of the first time, second time testing some of this stuff. So it'll be interesting to see if that Magnificent 7 ticker has any sort of confluence to Fibonacci, if you will. So far, the top tick is working to a degree. I mean, I'm not gonna write home about it. It's pretty much nothing, right? It's just a little smooch there. So again, you can see, right, 161. We're hitting that. So like I said, it's kind of a first time testing some of this stuff. It'll be interesting to see if the combination of all of these tickers hitting the 161 causes them to pull back on the day. And if those pull back, then you should see a decrease in the NASDAQ, right, as we reprice those equities a little bit lower off their longs. So, yeah, anyways, so there's your little top tick pullback on the NASDAQ. So cool. Not bad. That one worked a little bit. You know, and as far as like this pulling back, you know, if you look at like the SPY, it's probably just going to be pulling back. See, like right there about the volume weighted average price. So as far as that top tick, like that would be a first target of a high frequency trading pullback. So I'd be covering into that VWAP because that would be the first high frequency scalp down off a high into previous market participants' volume weighted average price zones. So like if the market's not going to fully top out here, which I don't think it would because it's a strong bullish day, this is just a hyper scalp down off a particular extension level. So unless for whatever reason you think the market's going to fully top and drain out, then you know those are the things you're always asking yourself throughout the day. Now, but yeah, so definitely can't be too long bias on these highs, right? Because we know that Magnificent Sevens reached its 161 destination based off of yesterday's fib cycle. The NASDAQ is, actually, that's so interesting. That is so, now that I'm thinking about it, it's even more interesting. Holy smokes. Look at this. Well, duh, like obviously, right? I'm going to just bring this up real quick. Hold on. What the? There we go. Where is? I can't detach that one. Whatever. So I'm just gonna bring up the other chart here. Wait. Yeah. So. Yeah, so, you know, what I kind of find interesting here too is that just in general, if you look at the patterning, which they should be relatively the same or close to, so that's a 5 minute, I gotta zoom out, right? So let's go like that. And I'm actually gonna clear up some of the stuff from the past because I don't wanna over confuse some people there, but I'm just gonna do some basic stuff here. So if you look at the fib cycle, or wait, that's both NQ and NQ, my bad. Shoot, oh, it's supposed to be the one below. Yeah, so I gotta do this. Sorry, my bad, y'all. So this chart here. So if you look at NQ, maybe if my freaking computer would work, champ. So yeah, pretty much all I'm getting at is you have the Magnificent 7 ticker on the left, and you have the NASDAQ market or futures market on the right. Okay, so if we were just tracking the price action of all the Magnificent 7, yesterday's high low, we've come into its 161, right? Which basically you can see how that's all just basically the same pattern here on the NASDAQ futures as well. So that's definitely, this high here is definitely an area we don't want to be looking like long bias into. You definitely got to be a little, it's a little sketchy, right? You got to be, you know, you're not long biased that high for the moment, especially as it's doing its first attempt, kind of first tag into, again, those highs, right? So just be a little cautious in that regard. A Netflix, or not Netflix, what am I talking about? Netflix. So, yeah, there's that. I wonder if it turns into anything bigger here too, or a bigger top. 5 minute momentum is it changing? No, that's been good. Nice little roll off the highs there for the Marquis, old Marquitos. Yeah, so I guess that's that. It's a huge candle. Market's still pretty much doing just fine, just fine, just fine. Yeah, as we said before, you know, still just a positive market. Actually, I'm going to shrink this one a little bit. I changed those top two, but that's fine, whatever. Not going to do anything about that. Market still cranking in banking. Market still cranking up on the old long skis. Yeah, so you're just, again, you're just staying long bias. I mean, we did do a little bit of a top tick pullback there, but that's only because we could see we met a long target. So obviously there would be a scalp reaction opposite. Remember, it's a long bias market. Anything we talk about bearish right now is just going to be top tick scalps, slight pullbacks as we're in a bullish market. When we go into a bearish market or the volatility index breaks down, we would at that point look for more aggressive rolling breakdowns on the market. But obviously that's not quite the case for the time being. I mean, yeah, just looking at some momentum stuff. The Nasdaq's, you know, RSI is a little hot. 1 minute momentum isn't super duper strong. And it still might be a little, same story as always, you know, it's sketchy to buy highs and just keep running up highs. So, you know, we kind of hope it continues to go up, but not because we're the ones doing it, you know. Again, the buy move started yesterday, so if you weren't in long over the 50 SMA yesterday, you're late as it relates to that side of trend. If the Nasdaq does end up kind of topping out and rolling over again, we'll be looking to take, NQ down to 25,321. Right now, SPY still holding the 1 minute volume weighted average price for the day. So we're not breaking down that intraday trend for the moment. SPY pulling back on that 30 SMA. Yeah, I don't have a 30-minute SMA there, so I'm not sure what SMA you're referring to exactly. Yeah, I don't have a whole lot to say here. We're just finding a little bit of resistance on the top of the market as the Magnificent Seven run into their 161. It does look like the NQ is working itself down towards that 25,321.77. Remember, some algos might be pinned right there. So, as the market pulls down, if it's not below that, can just kind of get bought right back up, keep forcing up. Let me actually change over a couple things here. No, actually we're good. Oh no, I need some MES in my life. Oh, should we be using the 30-minute SMA as our long bias and use lower time frames as our entry? That's one way to do it. You can have entries on lower. Yeah, I guess. There's the pullback on NQ down to 2,000 or 25,321. So the short-term pullback target would now be complete as it relates to Fibonacci there, or well, one of, I guess you could say. So just keep that in mind. If we end up taking out 2,000, or basically if we end up taking out this level, we'll look for the ES, MES to go down to 69.30 or so. So 690.30, yeah. Yeah, give or take. So the 30-minute 50 SMA is really just where the market makers transition the market from what was bearish to bullish. So you can look to have entries as close as possible to that transition point or the back test of that 50 SMA. That's one way to interact into the market. You can look to be long at Fibonacci levels. You could look to be long at VWAP levels. For me, it's really about differentiating between what strategy you're using and why you're using it. So for example, I am long 3x leverage UPRO because of the transition of the SMA yesterday. But I was just currently short-term bearish the market because of Fibonacci levels off this high. But because I was bearish Fibonacci levels off this high does not mean that I would close my UPRO position, right? Because my UPRO position is in relationship to the 50 SMA. It's not about the Fibonacci level we're running into off today's highs. So a lot of times you do have to differentiate between why you're doing something in the market, when the strategy makes sense to use, or, there you go. At the end of the day is you said, should your entries be on the lower time frames? Well, at the end of the day, if we cross over the 30-minute 50 SMA and the market is going to go up, no matter what, whether the price of the SMA, it's like if it crosses on a 30-minute, whether you buy it on a 1-minute chart or you buy it on a 30-minute chart, the price is the same, right? You know what I mean? And the SMA calculation is the same. So granted, it might be easier to see the pullback on a 1-minute chart versus a 30-minute candle to it, because all you're going to be seeing on a 30-minute is just the candle going like this. On a 1-minute, you might see a trend down into the level. But yeah, objectively, you want your entry as it relates to SMA calculation market shift. You want your entry as close as possible to that SMA as it's transitioning bullish, right? That has nothing to do with buying oversold bounces, right? Now, if you ask me, well, what about this down here? Well, you can't buy an oversold bounce waiting for the SMA to turn positive, right? If you want to do a reversal trade, you have to buy the bottom of a selling operation, right? If you want to short a top and do a top tick reversal trade, you have to short the top of a buy signal, right? So once again, that's the differentiation between strategy, right, and trades. And so each trade that you're doing has a specific time in the market to be doing it, right? So if you're looking for trend change, regime shift movement, you'd be looking for long over the 50 SMA or short over the 50 SMA. If you are looking for oversold reversal bounces, you need to wait for the market to go below the 50 SMA, then sell off. Wait for RSI to get oversold, wait for MACD to be oversold, wait for stochastics to be oversold, wait for whatever to be oversold, and then find what you believe to be a reliable support, and then you buy it, right? Like right now, what I think we're doing in the market, this top that you're seeing. So for me, when I look at the top in the market, right, on the SPY, and if we go look at the NASDAQ right here and we look at this top, some could easily just say like, oh, the market's run out of momentum. Yeah, maybe the RSI is 70 here, maybe the MACD is overbought. There could be 1,000 different reasons why, right? One of the reasons what I'm looking at is because I can see, when I look at the Magnificent 7 combination ticker, they've hit their long target destination of 161. We know that when the market gets here, there can be opposition or inverse reactions that last for a small period of time. They maybe lead to a bigger move, etc. So when we talk about doing a little bit of a top tick sell or a top tick short, it's because not we think the market's bearish, because we know it's not, right? We know the market's over the 50 SMA. So it's not like we're shorting this and going, oh, the market's in a bearish trend. No. You know what I mean? So there's, as they say, strokes for different folks. I was going to try to say something cool there, but it's not working. But it's strategy for different times, reasons why. And I think that's where a lot of new traders are going to struggle, is they don't know how to differentiate. First, a lot of new traders and investors in the market, just like me at many times in my stages of my investing and watching, is you don't know like what stage or what phase of the market you're in. You don't really know why something, like level. For example, we're just doing a small top tick short. Right here, this little pullback, that's it. It's just like a top tick scalp short. It might develop into a bigger pullback. It could, but first thoughts are not that, just because we know we're in a buy move, right? So we would just have to have the market just go into a sell-off, which can happen. Does it? We'll see, right? But we're not going to be long biased into this high. It's just, we're just not going to do that, right? We're not long biased into that high because we know that longs are completing there. So if long trades are completing in this area, then profit take can start and top ticks can arguably start. So we're just not gonna, So yeah, that's it. Just got to differentiate between why you're doing something. So yes, yep, that's that. There's a million different ways to interact in the market. Know why you're doing something. Know what side of the trend you're on. And that's the thing is, at the end of the day, is most traders, even myself, through many parts of my career, you might even become hyper-focused on one strategy. You can't see other things, and everyone's got their path, and it takes a long time to learn a lot of things, and then to be in front of a chart and, be able to go, that's what we're going to use. That's what we're using right now, right? And be like, we're not going to use that right now. Or markets are probably going to go here, now, and not there, right? It's all a probability game. And once you've seen it enough times, then you get an idea of when something probably is going to happen, right? So that being said, right, we know for a fact, right, that the average retail trader is not running a Fibonacci on the Magnificent 7 stocks and going, oh, like that's the destination, and there can be, that's not happening, right? Not that some don't. But again, just the majority of market participants, right? Majority of market participants don't know that we shifted the 30-minute 50 SMA yesterday, which can lead to a bullish day or follow through. And now here we are, the market is booming, we're up today, and obviously if we go look at the news, we're going to know that the news is in our favor, right? So stock market news today. I guarantee they're going to be like, oh, markets are up, right? Stocks rise, adding to Tuesday's comeback as NVIDIA and Oracle. Shares, did they have their earnings? Someone's shares gained. So what? Did they go up on earnings, right? Was that what was going on with those guys? Or do they have earnings today, or is it tomorrow? I don't even know. I don't even really care. Because I know I don't have to follow the earnings. If the market goes into a buy signal, we can go up, right? You see how that works? Dow closes more than 350 points higher as software stocks bounce back from AI. But literally 3 days ago, they said AI is the reason the market crashed, but now AI is the reason the market's up. I mean, can anybody get these guys a hard helmet to walk around with on a daily basis? Because I don't know how much more brain damage they can take. Stock market today, Dow and S&P 500 jump as software stocks lead AI rally. So I guess the brother and the sister of the same mom work at CNBC and Yahoo, and they come home together at their mom's dinner table and discuss what they're going to write the next day together, because it's the same thing no matter where you go. I mean, like, I just want some originality in this world. I mean, come on, people. It's getting old. Stock market today. Stocks rise ahead of it's NVIDIA's result. It's the major indexes rebound. Whoa. Shocker. You know? So, very simple things here, ladies and gentlemen. Very simple. They are repeatable. It's an ongoing system. Nice short off the highs. There is the MES coming down into 6930. So if I bring this one up, I'll show you real quick. So we're pretty much just, we're working. So for example, ready? This is how we're kind of doing this. We are working a resistance zone off the combination Magnificent 7 long target destination. So we're working resistance there. One could just say that my computer is annoying, but also one could say that we are simply working resistance off of the 161 destination of the futures market. Okay. Now, the pullback of this market, or this futures market that we're seeing, could be as low as 6,930.33, which would be the back test of the 100 or the 0 fib here for the ES market. I know that's a lot to take in. My business partner Brandon's taught me many things over the years. He is still significantly better at all of this than me as far as reading Fibonacci. Maybe one day I'll catch up. But one thing's for certain, if I do ever catch up to his skill, I think YouTube is really, really not going to like our live streams. They'll do everything to not have our live stream be shown, I would imagine. But we'll see. So this right here is currently a little bit of a support, right? Obviously, if that gives up, then we might see more down, blah, blah, blah. You get the point. But just all these fib levels are reactionary levels of liquidity and so on and so forth. So that's been a great short on the market. As you can see, look at NVIDIA is just selling off now. So obviously the market's been going down and blah, blah, blah. They even shied the back test here, so arguably could be leaving the door open for a drop later to back test. Sometimes we'll see that. Kind of setting the stage for continuation there. Maybe after some sort of scam pop back, but anyways. So let's look at some VWAP stuff, right? So obviously, even if the market were to continue pulling back, right? Low, high, just like that. Give or take there to there. So that would be, oh, wrong one. Ah, son of a puppy. Son of a puppy. Get that reorganized like so. Yeah, so the current trend resistance for the volume weighted average price of the last leg is here. So that's a very concentrated volume point. As long as the market maintains below that, trend can stay down relatively easy in the immediate. And we would still be looking for the market to go, geez, down to 6,930 6930 in general. So we'll see if this is going to end up result in a shy and a ramp back up towards basically volume weighted average prices. All right, so if we're not going down and actually filling this fib and we do the old scam shy, then we'll most likely be seeing markets rallying back to here or here. So I mean, it's really pretty straightforward. We're either going down to target or reversing back previous traders in the market. All right, and I know it sounds kind of silly saying like that, but that's pretty much it. It's like either we're dropping out to where my arrows say, or we're going to do the scam pop, screw everyone over back to these levels, and I'm indifferent either way. It doesn't really matter. Nice little drop out there. Still scam shine, you know. You know what's funny is just the other day I was laying. It's weird. It's like. I started hearing my business partner Brandon's voice in my head more as I was trading. It's kind of funny. Now, can't really call my business partner anymore, but you guys know. It's like, it's just funny. Some of that lingo is kind of translated over to me over the years. Again, so just again, as it relates to the fib market, you know, you can call this the 100 level, the 0 level, whatever you want to call it, but you know, again, that's pretty much where the market's trying to work itself on the ES. And like I said, if it results in a no fill back test here, again, we could be very well just looking at these the volume weighted average price back test, like so it'd be like there, and there now. So I'm going to add another one. So these are going to be all of the volume weighted average price back tests without going in. Oh, sorry, I might have had that wrong. I think I had that wrong on the SPY. My apologies. It's right here, this level. I had that kind of goofy. 6930, like give or take. It's like right, like something like that. So I kind of probably had that a little wrong. So yeah, anyways. Weird. Yeah, for sure. So it'll be interesting to see if, hold on, I gotta use my brain for a second. So far, the 1 minute momentum, I mean, yeah, one could say RSI right now is on the, I don't want to go through, I don't want to sit here and repeat every single indicator and every single little thing. That's just too much. But yeah, so we'll just go with the hold arrow and me kind of just briefly telling people what's probably going to happen, because again, I could just go over 1,000 different indicators at the end of the day, but you know, then it's just harder for me to focus all the time. But yeah, basically just looking at some momentum indicators, things like that, gaining an idea for whether or not we're going to hold the bottom, pop it up. So again, these are just us retracing the volume weighted average price targets on the backside. So, you know, everybody who is just basically trading down, we're just going back and screwing them over right now. Pretty straightforward, very common, not a big secret. I mean, it is for most of retail because they have no idea, but you know. Again, the 5 minute momentum for the market is still positive. So like that's another thing too, as far as like this dip goes. Currently 5 minutes. Actually, that's funny because that's actually, I love how there's sometimes different readings. Or wait, did I have that right? Oh, yeah, I do. I'm looking at, sorry. The NQ, the NASDAQ 5-minute momentum, is still positive. It hasn't given up yet. So there's just some things. If the market's going to continue sliding down, you might need some momentum to kind of start changing down. And if not, then obviously we can just kind of rally the market back up and start, start looking for maybe like the high day volume weighted average price, so on and so forth. Like that's going to be arguably the next level up. All right. Obviously, you have to break the previous 1-minute highs and yada, yada, yada. But all right, you got some positive 1-minute momentum. You have RSI back to the 50, and so, if this thing's going to pump up, you're going to need some RSI to shift. You'll need momentum to keep picking up, and again, you wouldn't even be looking higher than the 1-minute volume weighted average price of today's highs. And if we don't retrace that, we're going to go back towards lows and into that 6,93051 price for MES or ES or whatever. So right there, there was a 1-minute, you can see there's a 1-minute micro change in the chart. That's the dip holding the 1-minute micro change. Now, if we clear these highs that we're coming into on the 1-minute, that is where we most likely squeeze the next long into that volume weighted average price there, just where I'm pointing. Let me just add one more. So that's there. So in the very micro, we would basically need this candle, or just candles in general, to hold above that VWAP, and then it squeezes up there. There's a 1-minute micro back test. Does it hold? Don't know, don't care. And there is our target complete. Well, when I say target complete, it's just target complete for what we're referring to on the stream. Not that it can't go higher, not that it won't go higher, but to effectively piss off everyone that's been short from that high, all we had to do is go there. We don't need to take them all the way back to the highs, right? All we got to do is just rip them through about halfway of that move, and most of them are all pissed off. All right, job well done. Thumbs up, guys. So you can see how basically what we're doing is we broke out the market, and that is a pullback to back test the breakout of the 63930, which we kind of scam shy. They didn't fill it, right? And now back long up to back test volume weighted average prices of everyone that was previously short in the market. There we go. Now, can it go higher? Sure. Does it go higher? Yeah, maybe. We are in a buy signal, so, unless the VIX breaks out, we're not looking for, remember beginning of the day, we're not looking to sell the market and break it down to the point where we're in a bearish market. We could do top ticks. We could do pullbacks off the high. Remember, beginning of the day, it's a pullback to dip long market. Pullback to dip long market. Why? Because we're in a positive 30-minute trend. So you look long, look for top tick pullbacks back to support, back to long, until proven otherwise, or until the system says otherwise. When does the system say otherwise? When the system is bearish, or unless the VIX breaks out. Did the VIX break out today? No. And is the market bearish? No. Dip to long market. That being said, dips can go down very far. That's the thing that most people, get tripped up on, is that, like I said before, it's still a dip to long market, even if the market, sold. That's the thing. The market could sell all the way down here, and it's still a dip long market. So when we talk about a dip to long market, yes, this was what we just saw, right? Was a breakout, a pullback, dip to long, right? Now this could roll over, break down, and it could go down here and be dip long, and it could go all the way down here and still be dip long. Okay? So that's the one thing, is when you don't know where the 30-minute shift is at in the market, you don't realize that the uptrend is still intact even if it rolled all the way down to here. It can still be an uptrend. So obviously anyone who uses a horizontal support line like that would get stopped out as the market resets the 50 SMA, right? And then just rallies back up without them. We're just going up to the 5-minute volume weighted average price now. I'll put it on the screen, but it's guaranteed right there. See how it just, so this is very common. It's not like it's magic. It's just volume and people getting screwed over, right? So it's like, the 1-minute volume trend was right about there. So if you're taking that one out, then we're just kind of resetting up to the 5-minute and so on and so forth. So it's not magic. It's not rocket science. It's just a common thing you see as the markets are progressing the way they're progressing. So now we've just reached the 5-minute volume weighted average price of this high or move. Obviously if you watch the video, which I'm assuming some of you did, some of you didn't, but do remember that we bought long the dip in the market on this day right about there. We did mention on stream they were going to be adding long back into the stock market there. We made a YouTube video. Doesn't matter what we did or what we didn't do, but just long story short, market was on sale. So we dollar cost averaged into the market, and now the market is all the way up here. So as an investor, it's always a great feeling knowing that when you invest into your long-term portfolio, within a 1 or 2 days time, you're already getting appreciation on your capital, as opposed to buying the high of the market, seeing your capital depreciate before going back break even, and then having to break a high before you make any return on your capital. So that's really nice. And let's see, what is the SPY up? So the SPY is now up from, give or take wherever that candle's at, about there. It goes in at 3, so right about there. So the market is now up a total of 1.55%. So I've got about 1.5% return on the capital that has been deployed into the market over the past couple days. So that's cool. That's the long-term dollar cost average portfolio, by the way. So that's good. And as I said, the next time the market goes into a sell signal and the market breaks down, I will, as long as I got some money to deploy, I don't have endless money. I got freaking 4 houses that I manage and take care of. I got other investment accounts and trading accounts and whatever, and expenses out the wazoo. So whenever there is new money, oh, by the way, the market is topping a little bit and rolling over. So remember, we talked about how we shied the $6,930 level on the futures. Again, that's kind of a scam shy, so could be basically selling off back to that level after doing the false scam bounce. To be honest, not really. I am very much so self-taught with pretty much everything. So no, I mean, Trading in the Zone by Mark Douglas, just because psychology is good, but that's really the only book I've ever really recommended. I'm sure there's plenty of books out there that have great value. I myself, yeah. I mean, I've read books, I've read investing books, and, the Benjamin Graham book, or The Intelligent Investor. I mean, that's good because basically teaches you kind of the fundamentals and basics of investing, which can't really go wrong with. As far as trading, though, a lot of the stuff that I've seen work for me over the years, and which has ended up not working at times, none of it's really been taught in a book that I've read. But yeah, pretty much all the things I've ever actually seen work that have good confluence, I have not read in a book. Even the chartered market technician financial studies and tests that I've taken, I've passed the first one, failed the second one, never went back, kind of debating going back. I've also studied to become a financial advisor as well. So I've gone through financial studies too as well. I'm still on the, sometimes I'm always on the fence. I just like finance. So, I've gone through some of the financial advising studies, a lot of it's law-based. I've done 2 of the financial studies to become a certified market technician, which I probably should. It would be cool to have that designation. I was close to passing the second exam, but man, it was also really tough, and I didn't really take a lot of time to study. I got close to passing with only studying for like a couple weeks. But that's because I had so much background in the markets already. I thought I could kind of skate away with not really trying too hard, and well, there you go, I failed. But I got close. But even in my financial studies of the chartered market technician books, it's not that the things in there aren't real, not that they don't work. Everything works to some degree, but there was nothing really in those books that I read and then was like, oh, this is where, this is it. None of that. That actually came on my own. One of which was learning from a guy on Twitter by the name of Master B. Jones. That was the 50 SMA system. Coming up with the standard deviation model that I use for, oversold, overbought conditions in euphoria markets or very fearful markets. That worked really well and still does till this day. I use that. Standard deviation is taught in the standard deviation's wildly used in a lot of financial programs, financial analysis. I mean, in all sorts of stuff. Understanding the standard deviation of a market. And anyways, the market did we fill? We kind of filled there, by the way. So just an FYI. We kind of got the level in that target. So did they shy it? They might have shied it again. But either way. So yeah, even standard deviation stuff was taught in there, but I was kind of looking for it in a way that I learned it first. Wasn't in there. I didn't see any of the academic financial studies and charting stuff that I learned talk about. And they might have. I don't think they did, though. Talk about regular trading hours, 30-minute, 50 SMA, the regime change between volatility markets and S&P 500 markets, how the news organizations and most of the news that you read in the market is really just a result of the markets going through uptrends and downtrends and things like that. So there's a lot of stuff that I just read that I'm never, ever going to really use. So. So yeah, I mean, all through the studies, like I said, I didn't, even my business partner, Brandon, I keep calling it, but anyways, my friend Brandon, trading partner Brandon for many, many years, probably the best trader that I've ever had. And I guess you could say, the chance of just being with and hanging out with just over the years. That's what I mean is and it's not like I hang out with a bunch of traders. I mean, I do, but as far as actively calling targets, I mean, I do too, but he's obviously got a little more skill in that department. But just in general, right? All of the tactics that kind of he uses, that I use now, that a lot of people that we've taught use, I mean, a lot of that is not on the internet. I did not see any of it in any of the CMT studies. So a lot of the things that we look for and a lot of the things that we use, volume weighted average price the way we use it, Fibonacci the way we use it, different gaps the way we use it, golden pockets in the markets that have not been tested that we use. A lot of this stuff we just don't typically see as your mainstream education. There might even be like another scalp long in this area. When I say just because we hit down into that target, so until the market gets confirmation below, you're not going to see like a breakdown, if you will. Market pretty much has to confirm that it wants to break down this 6930 price. Until it does that, you're not going to see obviously the market dive off more, but just in general. So we're going to track the volume weighted average price of this market down again. So we kind of did do it to a degree, but this is pretty much the counter pop level. And as long as the market maintains below here, then you still have that opportunity of kind of rolling it down, maybe getting a break below these lows. But just in general, and you can kind of see this candle got close. So, that's just I don't want to be, I guess I do want to be detailed, but that's pretty much what's going on for the moment in the micro on the ES and on MES and on the SPY, etc. Now, as far as, I'm just trying to debate if the momentum is favorable in the way that we will just break down or what have you. All right, so there would be the 1 minute micro counter long trade back to those guys. So that would basically be complete, kind of. It's kind of still, there we go. So there's the 1 minute micro reset. That's done. And that's very easily how we screw over people who short lows all the time. Like, see this? How like someone's like, oh, it's going to break down. Like, is it? Are you sure, bud? And then we just take you and just push you right back out. So anyone who shorted the lows there, we basically used their accounts to transfer money to our accounts with that little shift up. So yeah, I mean, that's that. Now, if the market holds resistance here, that's an if, like I said. If not, this is where, again, some shorts can kind of get taken out. I know where it would go if it does get taken out, but we don't want to jump the gun. We still want to, again, we got to, and here's another thing, guys, what I'm going to say in this exact moment, please pay attention to, seriously, because this is going to just give you the next edge where you don't even have to listen to my voice. Ready? See how the market, and this isn't perfect, but it works very, very well. It's about patience and just thinking. This is a 1 minute volume weighted average price. Can it hold resistance? Yes. Will it? Don't know. Can it? Maybe. Market can always do whatever it wants. But see how these are 1 minute VWAPs. Market comes into them on this 1 minute candle. Notice how the next candle is red. So when dealing with 1 minute VWAPs, when market gets into them, be patient in the sense that if the candle is green and it comes into, you might need to wait 1-2 minutes for the 1 minute VWAPs to kind of do their job, right? So all I'm getting at is a lot of times if you see the market press back into your 1 minute VWAP, right? Yeah, you might want to get short on the first candle that tags it, but you have to understand, even if it's going to work, the algorithms usually won't let it roll until you transition the next 1 minute, right? So the candle that's green coming into, much harder to take that one back to a red candle or put a big wick on it, right? A lot of times they'll move it into the VWAP, they're going to hold it there for a second, wait for the new candle, and then they might, if it's meant to be used, then they'll transition it down, right? So just know any VWAP, whether 1 minute uptrend, 1 minute downtrend, if it's going to be used successfully, a lot of times you need to let it come into the price zone. You will then need to let the time of the market make it to the next candle, right? You only need to wait 1 or 2 minutes, right, in theory, to see, are the algorithms using it, right? So now we know that what? We've come into this 1 minute volume weighted average price. We've had people short it, whatever. There is some red candles. So we now know there's been some people getting involved. Just in general, it's just candles, right? So bottom line is, if the market were to get above there, that's where we might start to take out some of the people that have been bearish, right? They're already on edge, right? And this is what the market does. They put you on edge. Either the market lower highs here or you get taken. So there's the start of some people getting taken out. And if they are fully taken out, we'll take them up to the 5 minute, which is just going to be right to here, right about there. That would be my estimate. Or it's going to be the 1 minute upper distribution. So let's see where the 1 minute upper distribution is. Probably basically the 5 minute. Band multiplier upper. Where'd it go? Huh. Oh, upper band. There we go. Even higher. Yeah, so if we fully squeeze off some people through this 1 minute trend, then the target of that full squeeze, and when I say target, it's not that we're trying to we just know. It's just, you just know that if we squeeze off, the market just is going to attack that kind of little volume zone on the upside. All right, so I don't want to get too into the weeds here with VWAP stuff because, you know, it can get, for someone who's new, it might get a little confusing, but anyways, so all we're doing right now in the market is we are currently holding support over this, basically this fib level, all right? And we're kind of just working little lower highs and resistance checks on the volume weighted average price of previous market tops, right? So that's all we're doing. We're just kind of doing little bounce backs, little resistance checks, right? And if throughout the day the market has enough weakness and we roll down, right, and we take out this low, maybe we see some more weakness. But that's then, you know, so. Again, I don't want any of my thoughts. Well, never mind. That's kind of, I was just like, again, there's a million different ways to interact in the market. So, you know, when you're watching a live stream of a guy like me or a guy, you know, somewhere else, there's a million different thoughts and things that can be going on, or the way someone might see a market and how to interact. So all I'm getting at is, you know, when we're talking about little micro stuff, know that we're talking about micro. When we're talking about fib stuff, you know, hopefully know we're talking about fib. Or when we're talking about SMA calculation, know we're talking about SMA calculation, right? Right, when we're talking about the market being bearish right now, it's not because we're looking at the market below the 50 SMA. We're talking about the market working a 1 minute micro lower high resistance off a previous volume, right? That could result in the market going to here and then going like that. It could result in the market pulling back to here, then getting caught in a higher low and then resetting volume up to here, right? You don't know for sure 100% how the market is going to form up indefinitely. You have an idea, right? And you know the key levels and you know all these things. It's just you never know for sure how the chart is always going to develop, but you know to some degree it's going to function like this. $1,000,001 ways. Absolutely. There are Fibonacci levels absolutely everywhere, right? So you just got to kind of figure out, you know, for yourself, you know, when and why and what you want to use, right? Like like in my mind, I could already see like the market. You could do like a scalp short down to 6930 if you want to. I'm not pulling the trigger on it only because I've just seen this thing's been kind of scummy, right? It's like, you know, it's kind of one of those things. It's like there's not a whole lot of profit down to there. It could very well happen, but do you want to do that? And it's like, eh. So it's like, even though I know the market can slide to 6930, it's like, am I really trying to get 2.5 points down? And they could squeeze me out to the 5-minute. It's just, it's one of those things that we already had the 1-minute lower high back here where we said it was probably going to be. So if you want to interact short, targeting down to 690.30 in the micro, then your lower high was back here, right? Shorting here, it's like, well, if we reset the micro, I can already tell you where it's going to go, right? So if you don't just break the slowdown, go hit that target on the low side, then what's going to end up happening is you're going to see the market come right back to basically where this green, pretty much where it already did. All right, it's going to go right back to about there. See how I just put the box here and it goes there? That was lucky, but you know what I mean? So if you short that low, you're going back there. So fib the pre-market extension. Do you just mean the pre-market price action? Because that's how I would think of that. So if you're talking about the pre-market extension, is that it's that one. All right, so I'll do it. You just tell me if it's wrong or if it's right, but I'll go from here to here, and I'm going to turn this one. Hold on, I got to see where the low is at. Is it that candle? I should probably put this on a 5-minute, not a 1-minute, eh? All right, cool. So we'll do it like this, and I'm going to turn this one to like purple or something just bright so we can see its settings. Oh, my nose is itching. How do I use one color? Let's do purple. And that one's kind of hard to see. We'll do blue. All right, so if that's how we're looking at it, then you have the pre-market high as the 100 fib, breaks down, now testing previous day, wait, why is that one off? Oh, is that one meant to be back? Hold up. This fib is meant to be a little lower, actually. It's meant to be like that. Sorry. And I'm actually going to change this a different way. I want it like this. All right, so my bad. Let me get that all set up the way I want. All right, so we got the pre-market done. Yes, yellow and orange section. Yellow and orange. Box the 61.8 to 38.2. 61.8 to 30.2. Boxer Magoo like that. So, oh, I see. Oh, I see what you're doing. So you're looking. That's funny. So basically, you're using the pre-market session the same way we do the daily sessions then. So you're going to be looking for your untested golden pocket into live trading hours potentially. I'm assuming that's pretty much where you're thinking, or that's your thought process on that one. No, I actually really like that because it's basically the same system, obviously, right? It's just the same system using a different market. So it's like layering market within market, which is the same thing I do with SMA calculations through time frames. That's interesting. And then it would be the same for the after hours in theory, not that it would work better, but if you do the after hours. Sorry, let me I'm using my brain, I'm kind of having some fun. So then if we do the after hours, so it's almost like, and I forget, I don't pay attention. I just call it pre-market and after hours. I know there's like Asian lows or Londons or whatever. So, I mean, at the end of the day, it's really just a game of screwing over everyone and always trying to balance a market. So you basically have to take every single market and look to basically screw over every single market at some point or another. All right, so anyways, we can see here with, let me just double check. I want to just make sure all my fib stuff's right here. So that's the 100. Yep, so we're back testing right now into the 100 fib. You know, do we break down? I mean, that's always the question. I mean, I don't really see a breakdown right away. I mean, yes, like I said, the volatility index isn't even, volatility's not breaking out. Momentum now, on the other hand, like the only way I'd be able to gauge a breakdown right now is like, I mean, the RSI is already pretty much oversold. On the 1 minute, MACD is a little meh. I mean, no one's really buying the 1 minute low here. The last little 1 minute low on the market, no one's really buying. I would say there's a little more sellers than buyers into the low for the moment. But now do remember, whenever I'm talking about momentum, remember momentum can change so quickly, right? So when I'm talking about these things, take it with a relatively grain of salt. You know, it's just me kind of narrating in my mind things that I'm seeing. You know, and I do see that we have a little bit more downside momentum on the 5 minute right now. The 5 minutes coming into, you know, a momentum over under, right? So if we end up breaking in the momentum over under down, yeah, maybe we'll end up shifting this 100 fib to the downside, and maybe we get a little more sell action. But for now, it's still being supported, right? You can see that right there, 6930, still being supported, not breaking it down. So, you know, and it's not that we want it to break down. Remember, it's not that we don't care whether you break down or we just know that that's support. That could be a breakdown spot if the market wanted. But right now, there's really no signals that tell us that we should be just breaking the market down. Volatility is not breaking out. We're in a buy signal. So unless Donald Trump comes flying out of Air Force One with some Trump tweets, or unless volatility just randomly picks up, which can only happen if the market goes down or the VIX breaks out, it's still just support. It's just a low flying kind of chill day, I guess, for the moment. I mean, we started off long. That was fun. We did the top tick short off the NASDAQ once the NASDAQ got into resistance, at which point we pulled the market on the ES down to target 6,930. Now this is support. So basically we can, like I said, we can still look at like little dips off this. We won't look anything more bearish for like short-term trading unless it was actually below that. And yeah, that's pretty much that, I guess. All right, so now we're back to the point where the shorts are getting annoyed and they might get squeezed to the 5 minute. Let's see. It's debatable. Like I said, it's, you know, everything is always up for debate, I guess, in the market. But so remember, we're talking about the 1 minute volume weighted average price. Look at it right now. See how we're getting over it now? Basically, the way this works in the micro is if it sustains over, then it just squeezes up into there. All right. If it goes back under, then obviously it doesn't squeeze up, blah, blah, blah. But, you know, like I said, this is very high frequency micro kind of VWAP stuff. And obviously, if we don't just zinc up into that level, then the next most likely thing is going to be a pullback to reset the volume weighted average price as per usual, right? So if we're not rallying up into that green box for the moment, then we're going to be looking down into, and these VWAPs are kind of goofy off this low. Hold on, I have to change some stuff over. Let's take that off. Yeah, it's not the most like ideal bottom, I guess. So, shit, what am I doing? There we go. All right, so there would be that little, I don't even want to call it, it's just how market transitions through volume zones, right? So there's that transition from that SMA to, right? Doink. So those are the shorts getting squeezed out of the last 1 minute SMA trend. And it's all really starting from support being held at the 6,930 fib level back test. All right. So now this makes, actually, I don't want to speak too soon because I don't want someone, I was going to say this, it makes this pretty much our back test level. Okay, there it goes. That's the back test level. And I was going to say that's slightly a scalp long level. So, yep. Again, I didn't want to speak too soon there, but that's our back test to scalp long level, which basically already happened in the micro. Again, things be moving fast. So, anyways. So if the market's going to really stay positive, this could very well be a transition point, and then we start to actually move the markets back up. Let's see. We're at the top-down volume-weighted average price now, so we're at basically the intraday selling trend. For this to work, we have to reverse that one out too. Yeah. What about the 5 minute? We're right at the 5 minute too, 5 minute top down. So that's our next big point, pretty much over this area. That's the next big point to get over. If we can get over that, we'd be more likely to see, again, a new set or new wave of traders squeeze out. There's no guarantee. We just know what can happen if we go through that. Since we're not above it, it's in theory can still be used as a resistance point. Now, if this ends up getting used as resistance and it doesn't break down right or doesn't break out, then, and the shift point is here, so there might be a little bit of a break VWAP used. Yeah, so this is all still really the back test level for the market as it relates to volume weighted average prices. Unless it breaks out, right? If it breaks out, you're not back testing here. So if you start getting through this and really picking up, then doink, doink, you know, we can start squeezing that market up. Otherwise, we'll be looking for like the reset and then potential higher low development, something like that. Yeah, that's a good way of explaining it. Each program is basically just playing over each other. They're just liquidity zones, liquidity pools, and you're absolutely right. They're just fighting. Again, I think the market's going to reset down into this breakout VWAP, like right down to about right there. All right, there it goes. So that's also a common little scalp trade I'll do is a pullback back to a breakout VWAP. Let me explain this one. So this is something, it's not that it can't, again, it's not that these things can't go lower, and it's not that, again, I'm just looking at things, I like things that are relatively repeatable too with VWAPs that I see all the time. Again, I could be doing a million different scalp trades at any point if I want. But, so it's really, I guess at the end of the day, it's really just like a short to back test, right? So this was obviously down. This was a break of structure on that 1 minute, right? So really all of this is just back testing that break, right? Now, it just so happens that this break spot, wait, let me rephrase that. It just so happens that the volume weighted average price of the breakout, that VWAP, tends to be right about the break level, right? So if I throw a VWAP pretty much on the candles that start to break over, it's all about right here, right? Which happens to line up with the 10 SMA, and it happens to line up with this previous breakout. But now, if the market had gone like this breakout VWAP would have been here in the future, and we would have used it there. So I'm just saying, like right now, this VWAP, you know, even though I'm using a VWAP, someone could be like, Connor, that's just a back test. It's like, it's true. That's only because it just so happens that the back test happened right away. If the back test did not happen right away and price appreciated, then this VWAP would no longer be priced at the back test. It would be priced somewhere up here. And then when the market falls over and we use it here, you can see we're not back testing there. So anyways, that's a very common one we'll do, is either a scalp short back to a break like that, or flipping back long into that level like you're seeing here, because as you can see, that's where a 1 minute micro trend change was at. And if we continue to support it, get through that high, then you start to squeeze off, obviously, people who have been short from the highs to a degree. It's not a perfect system, and you know, markets always do as they please, but you know, it's pretty reliable, I guess you could say, to a degree. So again, that's market moving up back into the 5 minute. Again, if we're successful at squeezing out the 5 minute, we would first look back to the 1 minute upper distribution, which, and this is as it relates to volume shelves and volume levels. This is what I'm showing you right now, has nothing to do with Fibonacci. Fibonacci had to do with us basically looking for this back test and these bounces, right? That was all fib, right? And now we're kind of working the markets in between the volume shelves of yeah, you get it. So, yeah, that's all of that, if that makes sense. Again, if we get the breaky poo, old snappy Magoo, which might be too early for it, we'll see. Then you just expect price is going to go up into about 691.42. Again, still could be a little soon, and the reason I say that is if you look, it's just down, bounce, down, bounce. Do you really just break and go, or do we, excuse me, kind of try to set something up again, then go? But we'll see. Again, market will do as it pleases when it wants. I myself am not trading this up long for that snap just to that 1 minute VWAP, only because I don't care. I don't want to chase this up. It's not a proper entry for me. And obviously, hindsight 2020, the long off the fib was obviously lowest risk based off of how things have performed for biggest reward thus far. Which I did do a few little bounce trades down here and took some profits and whatever. I did a little scalp there. Again, a lot of the trades that I may or may not be doing at any given point can be so fast that there's no way that you guys would even be able to participate on half the things I do, to do it to a degree. Some of them, right? So, and that's because of the delay on YouTube, hesitation in your own brain, and then the way the spreads are, and then how high frequency trading volume weighted average prices work. And so, you know, anyways, so again, that's why I kind of just sit here and try to help you guys understand what's going to happen, arguably before it happens, so that way you can hopefully plan on a trade yourself, or not get screwed over by the market. Holy smokes, it's already 11 o'clock? Dang, son. Dang, son. Morning's going fast. Why is it going so fast? Either way, I'm going to go get a refill on some coffee, and I will be right back. So, don't go anywhere. Or go hang out at CNBC, because you know they'll tell you what's going to happen. Alrighty, ladies and gentlemen, things are about to get a little crazy in here. Nah, I have no idea. I'm just saying random stuff at this point. Man, I cannot wait for the weather to turn. It's blowing like 25, 30 miles an hour outside right now. It's just freezing cold. I also live right on a lake. Well, I'm not on lakefront, but I live right just off the lake. And we live on the side of the lake, and all the wind comes down and over the lake and just picks up speed across the flat lake. Nothing to break the wind, and it is mighty cold on this side in the winter. Oh, oh boy. All right. So, ladies and gentlemen, today we have used the $6,930 price on the futures as a bounce level. We have done numerous volume-weighted average price backtest trades, bounces, longs, etc. I don't know what else to say. You're just going to have to stick around and watch and wait and see, because it'll just keep repeating. So right now we are retesting the volume-weighted average price of the bounce, right? So this whole bounce, remember we talked about, it actually did go up to that guy. But anyways, right, we talked about it resetting. So this is what we would call the reset to the 1 minute volume-weighted average price of this low. So the way I kind of think about it, and it doesn't always play like this, but it's, if you were to keep it super duper simple, it's either bounce or not bounce, right? And it obviously doesn't always move linear, right? It's not like, holds goes up, right? Or just breaks and goes down, right? It could still, be choppy and things like that, but that's the basics right there. So a lot of people buying up that market there and that move, most of them probably stopped out on that pullback. And when I say stopped out on the pullback, that's not necessarily true, because you do know that a lot of people do things like this. They keep stops at low. So, there's that. But, then it means someone would have had to buy the low. Or better way of saying it is maybe that their positions are red. That's another way of saying it. Because you never know when someone, you just know that most people didn't buy that candle on the low, right? Or just, it's like just the average trader is probably, buying a breakout or whatever. So we know their average price is about there. So unless it's being held, they're starting to go a little underwater and they get nervous. Thanks, Al. Thank you, Manuel. I say thank you for sharing your knowledge. No problem, brother. My pleasure. I gotta say, there's honestly nothing I would rather do besides maybe go golfing right now, but it's freezing out. But yeah, I really enjoy watching the markets. Involving myself in markets, educating people on it. It's really no skin off my back. I absolutely enjoy and love the market. So come hang out. We know lots of things. We can teach lots of things. Can pretty much show you how to involve yourself in the market, thinking somewhat outside of the box. And really. For sure, you keep coming and hanging out, you'll quickly realize there are things in the market that do in fact work. They do repeat. There is it's not just random. A lot of it is are programs and algorithms, and these things repeat. So just keep coming, hanging out, and we'll just have some fun. Thank you. I appreciate that. Yes. Me and Brandon are gems. By the way, Brandon is at home resting. He has had a surgery. He's at home resting, obviously waiting on some information, more news, if you will. But he's at home and he is resting and, getting as well as he can. So that's good news for the moment. And that's all we know for the moment. And I'll let you guys know more than I know. I'm sure he doesn't mind. But yeah. Yeah, so I think he said he might have been getting back to the grind again. Us humans, it's hard to keep us down for too long. We get a little stir crazy. SPX 21-point move. I don't know if you're referring to, hold on. Guys, I don't know if you're referring to the pullback we're currently under, or if you're thinking there's going to be a 21-point move coming. You got to help a brother out here. Yeah, so, at the end of the day, me and Brennan we are very open and very willing to share information and trading approaches and trading strategy and trading edge, and we generally speaking don't hold anything back. There's arguably, there I don't know, some people believe there could be gatekeeping of information. There's always a topic of discussion in the markets. Maybe I don't. Everything that I learn and all the things that work for me at some point or another, I always share to my benefit and probably to my own demise at times. But we don't hide anything. We don't gatekeep. Anything that works relatively well, we will share and we will show you. Strategies may come and go a little bit, or things may change a little bit, become slightly different, nuanced at times, but they all tend to work, to some degree, right? And the things that work really, really well, like Fibonacci and the SMA systems and volume weighted average prices, the way we use them. We don't hide that back, or how the market transitions from one moving average to another. And so you can kind of learn how to get price targets on the volatility index or the S&P 500 based off of not only Fibonacci, but moving averages. That's something else, and maybe, so I'm just saying there is pretty much no restriction of trading knowledge here on these streams. But see, here's the one thing that I'm hoping more people have fun with and start giggling with me about. So if you guys would, maybe interact in that way, which is, obviously we talk about the 30-minute 50 SMA system. As you maybe learn that a bit more, if you don't already know it pretty well, this is a fun one. The 50 SMA system. But I want you to interact with me because it's fun. When you guys see the, I'm going to change this to a different chart here so I don't mess up these fibs. Unnamed, sure. Oh, I have to pay for that one. Yeah, I'm a cheap bastard. I ain't going to do it. I'll do this one. All right. If you guys recognize the news change, right? So that's that. Honestly, outside of trading and how well you may perform or how well you may understand, one thing over another, if there's one thing I really want for our stream is for everyone to be on the same page, especially when it comes to the system and when it comes to the news cycling, right? Like, we know when the market goes over this SMA, the market goes positive. So we know if we do get the successful SMA regime change and we get a positive market transition, we know the news is going to be positive. So it's kind of a game we play where we come in and we get on stream, and then every single day we go, is the market positive or negative? And you don't need me because you can just see if it's positive or negative. You go, okay, if it's bearish, then there's going to go our news change. So that way when we wake up every morning, we can all collectively as a group just kind of giggle and go, what are they going to say today about the news? Because we know it's going to be positive. So it's kind of more of a game of trying to see if we can, predict what they're going to talk about, what they're going to say, because we know news follows price when it comes to the stock market, not the other way around. When it comes to individual stocks, news or price follows news. Okay, individual stocks, price follows news. When it comes to the stock market, news follows price. So the stock market as a whole, and individual stocks too. There is a way to kind of get an idea for that, but it's harder. So, people always talk about, oh, how can you predict the news? And how... For individual stocks, it's very challenging, okay? But for the stock market, it's relatively easy. And it took me a long time to figure it out. But basically, you just know. If things are going up, news will be positive. If things are going down, news will be bearish. You just kind of have to figure out where that transition point is at and meaningful enough to create that transition in psychology and sentiment for the market. And that happens on that 30 minutes. So every day when we get into stream, you guys should be able to come and go, oh, market's over to 50 SMA. Connor, honestly, news is probably going to be positive today, and oh, the economic calendar says that we have GDP numbers coming out today. Okay, so if GDP comes out and the market's positive, chances are they're going to say, oh, GDP numbers are good, right? Or if the markets are going up, they'll do something like, oh, right, AI is very positive. Oh, so maybe it's like today, right? CNBC, or this was 18 hours ago. But see, look at 18 hours ago. I don't even know when that was. Well, I guess it was 18 hours ago. But look at this. Ready? So why would I pay $149 for Jim Cramer's CNBC Club when I could go to the stock market network and know when the markets are going up, prices they can go? I mean, I don't understand. Anyways, the Dow closes more than 350 points higher as software stocks bounce back from AI disruption sell-off. So, right, we could have assumed maybe yesterday when we went into a buy signal that the markets were going to go up, because that's just generally what happens. Oh, AI has been a hot topic lately, so maybe they'll just give us some AI news. And there you go. And now some kid somewhere is going to wake up and be like, oh, yeah, that's right. CNB, oh, the AI. Yes, Allen Iverson. He's come to the market and he's alley-ooping on everybody. It must be the AI. No, it's just the basics of trend analysis. So that's what we should be able to do every day as a collective group on our stream. Literally wake up and go, oh, over the 50 SMA, news probably bearish, right? And then from there, almost build estimates of what it's going to be. But yeah. Can bad news be good news? Yes. That one's a little bit more tricky. Yeah, that one's a little more tricky. So what you've just described is, can the market be in a buy signal, but you're still getting bearish headlines or somewhat bearish headlines that are counterintuitive to the long? And yes, and it does happen. And sometimes it's kind of subtle. And I think the only people that realize what's going on in those moments are the people that can read volatility really well. See, what I've noticed is we could be going through a buy move like we're seeing now. Let's say this long lasts for 5 days. And on the 5th day, we wake up and the volatility index starts to change trend, right? So the market is still priced high. The S&P 500 has not broken down its SMA. It's still positive and it's still trading up. Say it hasn't even really started pulling back much, right? It's just kind of chilling. And then we see that volatility is starting to break out a little bit. That's where we might see a subtle market change in tone. And I don't know if when I see that, if that's sort of a news signaling to those that can understand it, that we are in fact getting ready to pull back, if you're noticing the volatility regime change. That's a lot of big words. All I'm getting at is that sometimes we will see markets going along for quite some time, and then we see the volatility start to break out a little bit, which then starts to cause the market to get a little fearful on the top, and it pulls back, and it can be an aggressive pullback, and that could be a subtle shock, and then we'll start to see the news change a little bit, but it will be intermixed. It will be predominantly bullish news material with some sprinkled in headlines of, oh, well, maybe be a little scared of what GDP might have next week. So we start to see the narrative of how things might change, because now all of a sudden today the VIX is telling us to maybe be cautious, right? So when we do get the caution signal from the VIX, when the market's in a buy signal, we will see sprinkled headlines of caution intermixed with mainly bullish headlines. And when I see that, again, that's kind of one of those moments where I'm like, we might be seeing a change happen. But I already know that without reading the news, because I'm reading the volatility. It's the volatility that's breaking out prior to the markets entering a downtrend, which starts signaling to me that we could start topping a market, even though it's bullish. So that's how that forms up. There's no way I could show that to you right now, because it can only happen after the market, like we're in right now, goes through its buy signal, right? So this just basically has to go up. Oh, shoot. So this market just basically has to go up. And then we'll just say that at some later date in time, when the market's up here, all of a sudden, the VIX starts to break out. That's what would tell me to start looking for the market to start topping and roll over, right? When the volatility breaks out, that's where we start to top markets in uptrends. Then what do? The 50 SMA. See, I'm going to draw the 50 SMA up. So we're going to say that in the future, hold on. This is fun. I'm enjoying this. I'm going to highlight this. We're going to do it like that. And we're going to change the color of that like this. Settings. We'll change this to red. All right. Again, I am long UPRO 3X leverage ETF. So while I'm sitting here with you basically just teaching randomness, I am long the market. We've been long since yesterday. I'm hoping that this long lasts forever. It won't, but I'm hoping it lasts for however long it wants to last. That's up to the system. We don't decide that, right? So when am I going to close the rest of my swing? Either when I'm happy with how far it's gone, or when the VIX starts to break out, or if the market rolls below the SMA. So let's change this back to what's it called? Yellow. So, like I was saying before, this market is going up. It's in a long, it's in a long, it's in a long. If the VIX starts to break out, right, that's where we look to pull price down and maybe start back testing the 50 SMA. So we will literally use, right, so this down here, this red line that I drew, that's the 50 SMA. We'll say in a couple days' time, it's priced up here at 693. And we'll say at that time, the volatility or the SPY is priced around 698. So let's say the S&P 500 is up at 698, and we'll say that the 50 SMA is down at 693. If the VIX starts to break out, we'll use the VIX breakout to top the market and sell it down, so that now the S&P 500 has to either bounce and hold the uptrend, or we do a new regime change. And it's the VIX breakout that signaled that regime change, right? So that's how we flow the market. We use the VIX breakouts to then pull markets down to 50 SMAs. Then from there it becomes, does the SPY want to hold support, or does it want to break down, right? And And then that's when the news starts to change a little bit, right? So the news will go from, as the market's going up, the news will go from really bullish to sprinkled in bearishness if the VIX breaks out. And then if the VIX makes the breakout and we pull the market down, people start to get nervous. And if we do go through the regime change, we go through a sell signal, then the market will be down big, and then all the news will say, oh, Donald Trump's fault. Or, oh, AI fears are back. Whatever, right? And it's just simply market traders and investors moving markets. And market makers rebalancing liquidity and all these things, right? So it's just a big game at the end of the day. So hopefully that all made good sense. Well, 11:30. It's 11 McTurdy. And let me double check this. So, but anyways, yeah, we'll probably end it there for today. I know that's a perfect stream. Again, thank you guys for tuning in as per usual. I will not be on tomorrow. I have to meet some inspectors at a property early in the morning. And then I believe I will be on Friday. And then all of next week I will be gone. Oh no, what are you guys going to do without me? You're going to watch the 50 SMA, like you've been taught, on the VIX and on the S&P 500. And you're going to watch the market go up for as long as it takes until the VIX breaks out or the S&P 500 breaks its 50 SMA. Okay? So I will catch you guys back on Friday. And, don't do anything too crazy while we're gone. Cheers, have a good one, and we'll see you back soon.